The rise of the staycation because of COVID-19 has made owning a holiday home really appealing. In this webinar, I want to explain what a furnished holiday let is for tax purposes and why you might want to do whatever you can to make sure that your holiday home is one. A furnished holiday let, or an FHL, you might hear that, is the name for a holiday let that qualifies under HMRC criteria. To qualify, the property must be in the UK or in the EEA and be commercially let. It also has to fulfil some occupation tests. Now, these are: the first one is that it needs to be available for commercial let for 210 days a year. So that availability clause will exclude any personal use of the property, because then it wouldn't be available for commercial let, or making the property available for your friends for under commercial value. That would also exclude those days from the 210 that it needs to qualify for in the year. The second is that it would actually need to be commercially let for 105 days in a year. This can be a real challenge for some landlords, perhaps in a year like COVID for 2020, where there was just physically not a holiday season possible to fulfill those 105 days. Nevertheless, that qualification criteria still exists. It has to be let for 105 days commercially in the year. And then the last one is that you don't want to have lots of long lets over 31 days that total 155 days or more, unless there's some kind of special circumstances. For example, somebody was booked in for a week but ended up having to stay longer than 31 days because their flights were cancelled, or there was a pandemic, for example. So for these tests, we're going to apply them in the first year to the first 12 months, and then we look on a tax year basis. So why do you want your property to, why am I telling you that you want your property to qualify as a furnished holiday let? Here are some reasons. Now, first of all, a really great reason is that you can split your profits however you like. So in the case of a property that is owned 50-50 between husband and wife, normally if this is not a furnished holiday let, you are going to be splitting those profits 50-50, whether that's good for tax purposes or not. If you want more information on this, please see my buy to let video. This is different with furnished holiday lets. You can split those profits however you like year on year. Second benefit is that your mortgage interest is going to be fully relievable. There's no restriction to basic rate relief, only for furnished holiday lets. And then a big plus for furnished holiday lets is that on sale they would qualify for business asset relief, otherwise known as entrepreneurs relief. So a tax rate of 10% possible on a furnished holiday let for capital gains tax, instead of 18 or 28%, which would be on a buy to let. As you can see, that's quite a big difference. One of the most common questions that I get for furnished holiday lets is, what do I do about my expenses before I started letting the property? That's not a problem. It's not something to worry about, because expenses incurred up to 7 years before the first let can still be taken into account in that first year of letting. Now, that's not just a furnished holiday letting thing. That's a general property letting provision for expenses incurred before the first let. Now, your expenses for a furnished holiday let are going to generally fall into 3 different categories, whether they're incurred before you started the let, or whether they're incurred once the letting is in progress. The first normal expense, if you like, is going to be what we call revenue expenses. Now, these are the expenses that you can deduct straight from your rental income. So they're deductible against the profits of your business, so they can work to reduce your profit, or they could also potentially make a loss that you're going to carry forward in your furnished holiday let business. They're going to be general day-to-day expenses, repairs, your insurance, your gas safety certificates, your agent fees, things like this. The second category of expenses are going to be something called capital expenses. Capital expenses for capital allowances. So these are for items that you're purchasing for that furnished holiday let. Again, remember, this is also including the 7 years beforehand, perhaps while you're getting that property ready for commercial let. These are items that qualify for capital allowances, which is the tax version of depreciation, and have different rules depending on what you've bought and how much you've bought. Now, if you have an item that qualifies for capital allowances, these capital allowances will go against the profits of your business, the same as a revenue expense, reduce your income for tax purposes, potentially create a loss. Now, the third category of expenses that something that you're buying for your furnished holiday let may come under would be just capital expenses. So capital expenses that don't qualify for capital allowances. So these expenses would be relievable against the proceeds when you eventually sell the property. And we're talking about things like extensions, walls, items like this, big things that you're doing to the property that are improving the property substantially. Now, if you are not au fait with how to break down these expenses, I would highly recommend that you do have somebody help you to do that. The best thing that you can do to help the person that's going to help you is to make sure you keep lovely clear records, and make sure that you write down anything that you're spending on that furnished holiday let, so that your advisor can let you know how is best to claim, what claims are available. Another question that I get quite often with FHLs is, what if I don't qualify 1 year? What if 1 year has been a really good year and then something major happens? It doesn't just have to be a pandemic that happens. It could be something like there's a major water leak somewhere around the property that makes it unable to be let, and you don't get those actual occupation days fulfilled for 1 year. Perhaps that's possible. I've heard of that before. Provided you qualified in the last year, then, or potentially in the year before that, there are two different types of elections you can make to make sure that in that odd year that you've just had, you can still have that property as a furnished holiday let. And one of those elections is called a period of grace election. Now, that's applicable where you've just got an odd year, and in a couple of years' time you're going to get back on track and fulfill those qualifying criteria. Or you can also look at making something called an averaging election. An averaging election is going to be applicable for people that have more than one furnished holiday let. Again, that's something where if you're not sure if that's something you can qualify for or do, then talk to your advisor. Another question would be, what happens if I stop qualifying as a furnished holiday let? So you might have made your period of grace elections, and then you might have got to the last year where you can do it and go, oh no, I haven't qualified again. Well, quite simply, that property is no longer going to be a furnished holiday let. The implications of that is going to be really the opposite of what I've been talking about as the benefits of the furnished holiday let. You're no longer going to have your full mortgage relief deducted. You're no longer going to have that business asset relief on sale, that entrepreneur's relief. And potentially you could have something called balancing charges arise on items that you have claimed capital allowances on previously. In this situation, it's really important that you do take some advice. Don't sit and struggle on your own trying to work these things out. Come and speak to somebody like me that's very happy to help you out with your furnished holiday let.